Hey, can you hear me, Robert? If someone can let me know if they can hear me okay here, then I'm going to go ahead and get started. This video does automatically record, so it'll upload. So even if you guys aren't here yet, you guys will be able to catch up. So, all right, guys. So basically, this video, what it's going to cover is price action on SPY. So obviously, you guys know that I primarily trade SPY because that's just what I like. Um, so a lot of people I feel like don't know a lot about my strategy, and I'll kind of cover just a little bit about it, but obviously not too much because we're going to mainly focus on the price action here. But the whole root of my options trading, my strategy, my TA, things like that, is all comes down to basically reading price action. So reading what the candles did, and more importantly, obviously, what the candle is going to do next. So I've been doing TA on like crypto and things like that for quite a few years and things like that. And basically, I learned over that time that I could apply that to options trading and just trading in general. And then that's just kind of how things snowballed. So basically, what I learned is that candles have a certain way of moving. And one of the reasons I really enjoy trading SPY versus like an individual ticker like, Apple or Google or something like that, or Tesla, which everybody knows I love my Tesla, um, is just because I feel like SPY is very consistent. Now, of course, there are times where, like we have this massive, so I'm going to start on Monday this week, June 5th. So if you guys want to follow along, this is a 1 minute chart right here. This is a 5 minute chart right here. And this is a 15-minute chart right here. So we're going to keep it really basic. We're going to basically keep it focused on SPY. Now, when I'm day trading, I do have up the VIX and VOLD, and I have those on a 1 minute and a 5 minute time frame, and I have those next to SPY. But when I'm day trading, this is what I have up. I have my 1 15 or 1 5 and 15-minute chart up. I actually have two 15-minute charts up, and I'll talk about that in a little bit. But so basically, we're just going to get started here. So the most important thing I think to know about price action is it really all starts at a higher time frame and works its way down. So what I mean by that is, so let's talk about the weekly. So we have a weekly candle. What's the weekly candle doing? That's what we look at on Friday night and we say, oh, okay, we bounced off the weekly AEMA, we broke through resistance, so we should expect an up week. Okay. Then we go to the daily candle. So on Thursday night, if you guys read my TA, Thursday into Friday. You guys know I was super bullish. I was looking for a breakout. I was looking to break through 430 finally. I was looking for about 433 to 435. Didn't quite get there. And obviously, you guys saw we got smacked down. But so then it trickles down to the 15-minute chart, for me at least. There are a lot of people who enjoy trading the 4 hour chart, the 1 hour chart. Some people do the 30-minute chart. But for me, I've never tried the 4 hour chart. I've looked at it when someone asks me to take a look and see what I see or whatever, but I just don't like it. The 1 hour chart is not bad, but I just feel like for day trading, it's too far of a time frame for me. So primarily what I do, and I'm going to take you guys basically through what I'm looking for on an entry. And I will caveat this with basically saying, Uncle, I definitely was thinking about you as I said the 1 hour chart fans there. But basically, I'm going to take you kind of through what I do during the day, what I'm looking for, and now I will caveat this here. Basically, my primary strategy does result around price action. However, I do use a few indicators to confirm what I'm seeing in the price action. So what I mean by that is I do not, unlike some people, and there's nothing wrong with it if you have a solid strategy and you really trust in your indicators, but for me, I do not take a trade primarily based off of an indicator. So like you guys know, I love DMI. I use DMI every day. But I do not take a trade only because the DMI is, if I'm looking for a put, I will not take a trade just because DMI is waving down. A wave down is obviously bearish, and that does mean that we're going to see a drop potentially. But the thing about the indicators are, yes, the indicator may wave down, but that indicator does not tell you how far it's going to wave down. What tells you how far it could wave down is price action. So for an example, you might have had this little breakout here. I guess this is a better example. So you broke out, came down, you bounced up, and then you have your breakout here. So your DMI is going to wave up right here. So if you're reading this price action, you're going to see, well, we haven't broke through the 20 EMA here. That could potentially be a rejection. So I'm not going to take a long there until I have confirmation, like you have here, of breaking through the EMA to have a longer, more chance at a better high probability win. So if your DMI waved up here and you're just like, well, I'm going to trust my DMI and I'm not going to read the price action, then you're going to probably ended up stopped out before the actual move happens. And that's something too, and I have covered DMI, I believe, and if I haven't, I'll do another video eventually on that. But you have to learn how the DMI cycles and how that plays into your price action. So we're going to go over to the 15-minute chart. Like I said, this is Monday from this week, June 5th. We're going to start with today, and then we'll just kind of work through it. If you guys have any questions, comments, things like that, just put them in the chat. There is like just a couple second delay, but I'll stop and I'll address your comment here. So the one thing I will say about price action is I do not enjoy price action the first at least 30 minutes of the day. Why? Mostly because there's such incredible volume, and this goes for power hour too. I do occasionally trade power hour, but very rarely do you guys see me trade power hour. And the reason behind that is that price action can be way more unpredictable. So in high volume, which opening hour is generally the highest volume 15-minute candle of the day, and that can really go anywhere. So, if you look at, this is our 15-minute, if you look at our 5-minute chart here, look at this incredible wick here. So, the whole candle itself was about $1.50, and if you look here, so this is 428.6, and this is 429.6. So we have a whole dollar wick right here. So that's a big wick, and that's what I'm talking about here, this opening hour. I don't like trading. So what we're going to go ahead and do is we're going to jump right in to 10 o'clock. 10 o'clock is about where I do feel like price action starts to normalize and starts to get to a point where you can kind of predict it a lot better. And that's when I usually start taking my first trade, is right around 10 o'clock. Sometimes I'll trade between 9:45 and 10 o'clock, but so here's our 9 opening 15-minute candle. We break out. We have a nice doji rejection. We come down. This is the 9:40 candle, 9:45 candle, and then here's our 10 o'clock candle. So same thing. What are you seeing here? You're seeing massive wicks to the upside. So what should that tell you? On a 15-minute time frame, that should tell you that there is definitely some selling happening right here. And this is this 429 level. So these are my supply and demand levels. So on the 15-minute chart at least. So this purple is a demand, which should be a support, unless we obviously break under it without taking it out yet. And then a blue is generally a supply, which is resistance. So ignore those levels for now, as June 5th, which is in the past, will not represent these levels. But so we come down here. So if you are reading the EMAs, and the EMAs I use, and you, in my opinion, have to use EMAs in order to read price action correctly. On the 15-minute chart, I do an 8 EMA and I do a 20 EMA. On the 5 and the 1-minute chart, I do a 20, which is the blue, and I do a 50, which is the purple. So for me, that's just what I have found over the years now to be the best for me and my strategy, and I feel like the best reaction time and the most consistent. There are some people that prefer the 21 EMA. Some people prefer the 9 EMA. On TradingView, and I was saying I have two 15-minute charts up at a time. On TradingView, I do have a 5 EMA up on there, and I do like that 5 EMA a lot. It is a lot more responsive, and it's a lot quicker, obviously. But when you're in a real extreme trend, that 5 EMA can be a really solid indicator. So I really, really do like that. So basically here, so what we're going to look at here is we have this huge wick. So we come down and you're going to see we closed at 427.92. So you're going to look at the EMA. We closed under the 50 EMA. So if you go back to pre-market, we tried here, we broke out, we rejected, and now we're closing under the 50 EMA. That is a bearish undertone. So when the 10 o'clock candle closes and we open into 10:15, you should be expecting downside. Why? Because in general, over the 20 EMA would be bullish and under the 50 EMA would be bearish. However, the one thing you need to look at here is where is the 20 and the 50 EMA. So here you can see, and this has been happening since pretty much, let's see here, 2 a.m. So the 20 EMA is riding over the 50 EMA. That would be bullish because 20 is lower than 50, and that just means that the shorter time frame is higher. So a lot of people will talk about an EMA crossover, and honestly, it's a pretty solid strategy. So basically what that strategy is essentially, and you have it right here at this 2 o'clock candle, whenever the 8 EMA would cross under the 20 EMA, that would be a bearish crossover. So when that happens, the theory and the strategy would be that price action will continue in that direction. So when you get your crossover, you would take a short. And in this case, in this scenario here, if you took a short right here at 2 o'clock, and let's say you even took it at the close, which would be 427.94, you would have a max downside right here at 426.38. So that's about, $2 or about a dollar drop there. So that's a pretty good payout, depending on, what your entry was. So in general, yes, we closed under the 50 EMA here, but one thing you want to keep in mind is that the 20 EMA is over the 50 EMA, and most importantly, there's a pretty good split right here. So the split would basically be how aggressive. So you can see as we rise higher here, the 20 EMA is getting higher and higher and farther away from the, or sorry, I keep saying the 20, I meant the 8 EMA. The 8 EMA is getting higher and farther away from the 20 EMA. So that basically shows a very strong price action and very strong trend up. So on this candle right here, 10 o'clock, if you were to be short and you were looking for a short, that would be, in my opinion, the right play. That would not be a bad play because of the closure under the 50 EMA. However, you have to keep in mind of what the time frame is and what could happen next. So if you look at the 10:15 candle now, what did we put in? We put in a big old doji right here. So a doji is essentially an indecision candle, but if it's at the top of an upcycle, so if we had a doji right here, or if it's at the bottom of a down cycle like this, most of the time it is considered a reversal candle. So if you saw this doji now in the 15-minute chart here, you're like, oh, I need to start looking for upside, especially when you see your 8 EMA over your 20. So this could be your bounce, and this would be the ideal, perfect call entry because you have your retest of support, you doji bottomed, and now you're going to retake the 8 EMA. So for me personally, if you're on a short time frame, yes, you could play this doji, and we'll go talk to the 5 and the 1 minute chart here in a second about how I look for entries. But playing just the 15-minute chart, so this would be if you're playing a longer DTE, probably not 0 DTE, or if you're just like doing long futures or short futures, you could enter on this and look for the candle here, but what I would prefer to do is you wait for confirmation. So your confirmation that this was indeed a bounce is your closure over the 8 EMA, and then you start your next candle up. So you can see we started to push up. You're almost always going to have some sort of back test of support. very rarely, and if I see a case when we're going through our charting here where it just like completely, this is kind of a good example actually here. But if you, very rarely will you have a complete breakout or breakdown where you don't back test just a little bit of either the support or the resistance. So here you can see we got the double top. We broke down bearish engulf, which is very, very bearish, especially the double top at an upcycle, and then bearishly engulfing. And then the next candle you can see here, we pretty much opened and then just dumped. So this one would be one of the exceptions where you're not getting that back test of resistance. So generally that's what I look for an entry, is we break out or break down, and I'm looking for that back test for my entry. So this is a 15-minute chart. You, in my opinion, unless you are in like, you know, a couple second scalp and you're just looking to get in and hit like 5, maybe 10%, depending on what time of day it is on a zero, you should not fight the trend. That's something I say all the time. Do not fight the trend. So in general, when I'm trading, I'm looking where the 15-minute chart's going first. So the first thing I'm looking, and I was telling you that I have two 15-minute charts up. I have this 15-minute chart, which I have indicators on during the day when I'm trading, and then I have my supply and demand here. So then I have my trading view 15 minutes up, which is strictly just support and resistance. So basically charting the candle bottoms and tops. And then for that, I'm looking at patterns. So I'm looking at the V bottom right here. So I'm looking for that for an entry. So I'm watching my 15-minute trend. I find a good 15-minute trend. So this is bullish. So let's say 1030 would be a great entry on a call. So we have our 1030 candle here. You can see we broke down, we bounced, we closed over. So now, because the 15 minutes bullish, I'm going to go to the 5-minute chart, and I'm going to try to find us an entry for a call here. So this was 1030 candles. So let's go over to 1030 here. So here's our 1030. So you can see our breakdown. We broke out, we rejected, we came down, we bounced off support, massive wick right there, came back down, and here is that 10-15 candle where we're dojiing. So you can see the same thing on the 5-minute candle here is doji, 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 boom, bounce, let's go. So 1030, 1030. So remember what I said about when you break out, you almost always back test support first. So we had our breakdown here. We didn't quite get a perfect double bottom, but it's pretty close. We broke out, and what did we do? We retook the 20 EMA. This is a very, very bullish sign, and I would be watching this strongly for an entry on a call. So what I'm going to do here is I'm watching my 1030 candle. Cool, we closed over the 20 EMA. In my head, I'm thinking, boom, we're bullish. Let's look for a call entry. And you guys will hear me out in the chat call out, okay, I'm looking for a call. I'm call queued because we have a signal, which is a closing over. So what I'm looking for 9 times out of 10 when I say I have a call queued or I have a put queued is I'm looking for that back test before I enter. So here you have our double top. We come down. So we did reject. So you have to be careful because, oh, well, we did reject here. You know, what's trend? Overall, you could say this is a bullish trend still, even with this candle below the 50 here. Why? Because the 20 and the 50 are still green. They're still pushing higher. It's not a downtrend. The 20 isn't under the 50. So then this is our entry right here. Why? Because we break out, we back test confirmation of breaking out, and then we break out again. So this right here, once you start breaking back over that 50 EMA, you don't want to be too aggressive, because if you're too aggressive, you're going to get trapped. You're going to end up in a scenario like this where you're like, oh, we bounced off this. And this, honestly, right here, this is a pretty solid bull trap. Why? Because you break out, you back test support with a massive doji here, and you would have had a great entry and a call because you see how much this rocketed up here. But then you would have immediately got bull trapped because you're thinking, oh, okay, well, we're just going to back test this 50 EMA support. We're going to break out here now that we bounced off support like we did here. However, you end up getting a nice big wick, and then you drop and you start chopping a little bit. So that's where, you know, you start looking at other indicators. You're looking at your 1-minute chart. You're looking at the 15-minute chart here to try not to get too bull trapped. But so 1045 is our ideal entry. So see how we're doing this here. We're going from 15-minute chart to 5-minute chart, and now we're going to go over to the 1-minute chart here. So this is 1030 candles. Let's look at it here. And also keep in mind, I use the Hakini Ashi candles, or however you say it. I just say HA candles on my 1 and 5 minute. My 15 minute is just standard candles. So let's see here, 1030. Here we are. 1030 is right here. So what do you see here? You have, we have a nice little bounce off the 20. 20 is here. So this is where you see it's a little different here. So we started with, on the 1 minute chart, the 20 over the 50, and then we have that bearish crossover. So now if you took the 1 minute bearish crossover, and I do watch for this pattern quite a bit, you can see here, boom, this is a nice breakdown. So you would have had potentially from 428.3 down to your low here about 427.6. So about a, what, 75 cent, 70 cent-ish move down. That's pretty solid. That'd be a really nice win, especially early morning on a 0 DTE. So let's go back to 1030. So we have our 1030. We're breaking out. Okay, so remember I said you don't want to get bull trapped right here. So you're going to wait for the wick. There it is. Boom. 1 minute candle starts to break over this 20 EMA. We're going to back test the 50 EMA resistance now. And you can see we come up, we reject the 50 EMA. So you're like, okay, I got to be careful here because we haven't quite broken out yet. So then we come down, bounce back off the 20. There it is. There's our closure over the 50 EMA. So for me here, I am automatically looking bullish. I'm looking for that breakout. However, what you can see that happens here is, boom, we get rejected, and then we come back down to the 20 EMA. We again try to break out. We fail, and then there we finally break out. So this is where you got to be patient. Why? Because, and I know you can do on demand with Thinkorswim and stuff like that, but I just don't like how it moves and how the candles print. But if you were to watch this live here, what you would be looking for, like this right here is where I would start. So this is 1034. So this is right before this candle opens right here. What I would be looking for here is for continuation. So we have our breakout. We're testing the 50 EMA. So what I'm always looking for, because basically what I do is I find the trend on the 15 minute. I find the entry on the 5 minute, but I take the entry off the 1 minute. So here we have 1034. We break, or sorry, we're going to go back to 1032 here. We break out. You can see though, what happens on the 1033 candle. We do not clear the high of the previous candle. This is an indication to hold because it is a possible fake breakout. And I have seen this a lot lately on SPY, and it's kind of something new that I haven't seen a lot in the last, couple months. But what we're getting are these kind of like choppy breakouts. So you see it kind of right here. So you have our bounce here. It looks like we're going to break out, but then we kind of back test, try to break out again, back test, and then we fail. There's just some like 3 to 4 minute periods of almost ranging, and I don't know, it almost seems like premium killing and maybe some stop loss hunting before the move finally happens. So I've been really extra cautious lately about these first breakouts that they are going to come back down. So sometimes you're going to end up missing the play because of that, but you're going to get stop lossed a lot less. So basically, we come back to 1041. So if you remember our 5 minute chart right here, that is the actual breakout here. So here's 1041. We get our nice doji. So that means we failed our breakout. We came back down. Then we bounced with a doji for the upside. We retook the 50. We're looking for that next continuation candle. So for me to take an entry, I need to see at least 2 green candle bodies, like similar to these type of candle bodies, not dojis, but actual with the body and then the wick to the upside. I need to see at least 2 of those, preferably 3 sometimes if I'm extra cautious, in a row, making higher highs and lower lows before I will take my call entry. So we're going to look at 1042. Nope, we come back down. Okay, 1044, 1045. Boom, let's take it. Boom, here it is. Massive breakout then. So that would, if you would have waited patiently for your entry on this candle right here at 428.55, your max upside is about 428.91, so about a 40 cent move. that's a pretty solid win. Um, and something to keep in mind about my strategy, at least, and I say this all the time, is that you are not trying to get the full piece of the pie, I will say. So, we're just out here trying to get breadcrumbs. So, the whole point, and I did a whole thing about this on Friday in the daily Discord on level 2 there. But the point of TA is to basically figure out what the algos, the computers are going to do, and more importantly, where are they going to buy and where are they going to sell? And our goal is not to play as soon as they buy until the very top that they sell. Our goal is to buy along the way and sell before the top comes. So you guys have to keep that in mind about day trading. And then, Wall Street Bets, I think, is really bad about this because they glorify, your 200, 300%, winners and things like that. And yeah, those are out there. And yeah, day trading, it can happen and stuff like that. But for the most part, consistent 10, 20% wins, even 5% wins with proper risk management is what's going to make, you profitable. So let's go ahead and talk about another entry here. So here we go. This will be a great entry. So a lot of times what I'm doing is I'm watching the 1 minute chart primarily, and I'm looking for the pattern. So you can see basically we entered this chop pattern at 10:53, and we didn't. Hey, can you guys still hear me? Sorry about that. I don't know what happened. Let me know someone if you can still hear me. Okay, cool. Sorry about that. I don't know what happened. It just I use Streamlabs and it like just kind of clicked off and did something weird there. But anyways, so basically what I was saying is 10:53 here. We basically enter this extreme consolidation chop pattern. So this is what you want to avoid trading. You don't want to get into this where you're catching a breakdown. Oh, now we're trying to catch the breakout. Then we're trying to catch the breakdown, another breakout, and you're just gonna get theta 8 hard. So this is right here where I'm seeing this is where I'm looking at my 5 minute chart. So this is 10:53. So let's look at 10:53 here. 10:53. So this is our 10:50 candle. So we're looking right here. Okay, we have a doji. Dojis are indecision. So that means we got to be careful here. So we're going to have a bearish engulfing. So 10:55 here actually looks like a solid entry for a put. But what should you keep in mind? Play the trend. Yes, reversal patterns are there and they do pay super well if you time them perfectly. However, most of the time, it is better to wait for the pullback and the bounce to take that entry. So here you might see the rejection and oh yeah, is going to be some downside here. But what's the better play? The better play is to wait for this 5 minute to come down here, retest 20 EMA support at 1105 and play this massive breakout candle right here. So let's look at that. 1105 right here. So you're going to have our chop. We come back down. Really, really nice bounce off the 50 EMA here on the 1 minute. So this higher high candle right here would actually be a great breakout candle. Now you're not going to get a lot on this right here. Why? Because you're playing off just a 1 minute chart. So you're only getting the breadcrumb. So if you have a nice entry on this doji and this bigger breakout candle right here, you got about max a 20-cent upside. That's probably still a nice 10 to 20, 25% early in the morning like that. That's a nice little win right there. So and then we had a big old rejection here. And this is where we start entering that chop. And you got to just look for the bigger pullbacks. So here we go on the 5 minute, nice double top. So you're going to expect that we're going to break down. Okay, here we go. We break down. We found support. So this double bottom here at 11:15 actually would be a nice a nice call entry. So let's look at it. So here's our 11:15. So this is where on the 5-minute chart you say, oh, that's a nice call entry. But what do we see on the 1-minute chart, which is what we actually use before we enter a position, is all you see is dojis. There is no trend here. This is a no-go. We do not trade this. We wait. We're patient. Okay, what do we see here? Oh, we're going to bounce off it. This right here, you got to be careful that you don't get trapped. You want that second continuation candle here before you enter. Because just like here, okay, we have a rejection, 1, 2. That would be a hard, good bear trap right there because you're expecting, based on the candles, that it's going to break down. But what is trend? Trend is up. You don't fight trend. Play the momentum. Play the trend. So here we are at 11:26. We doji. Oh, this is a nice breakout. Okay, here we go. This is consistent. Let's look at it. 11:27. Let's find our 11:25 candle. There it is. This is a really nice double bottom here. We have a nice reversal to the upside doji here after a failed breakdown right off the 20 EMA. There it is. We back test 20 EMA support, and here we're going to have a nice little breakout. So this 11:25 candle, which starts right here, this is your breakout. So you can enter probably right about here. So 428.8. Max about 429.1. So nice little 30-cent move right there. So let's look at something a little bigger. Let's go to this this 130 breakdown here. So it says 110 breakdown. So it says 1310. I use military time. So we're gonna find our 110 candles here. Let's see. So remember, it all starts on the 15-minute chart here. So what do we have? Okay, we have our breakout, really nice here. Nice double top. So you're like, oh, this is a pretty nice rejection. The only reason you would really start to look at this for a reversal here is the perfect double top. Also, we know we're coming in on 430 resistance, which is a major level on the daily. And then we bearish engulf. A bearish engulfing candle is obviously extremely bearish, and that's one that you can look for continuation on. So here, this is where it's tricky though, because you have your 8 and 20 EMA, and you don't love taking a play against trend, which obviously the whole morning has been an uptrend. So you should actually expect this to bounce, and that's where your other indicators are going to start coming into play, and you're going to look at other things for confirmation of this reversal. So, okay, let's say we see a reversal at 1 o'clock here. Really, 1:15 is where it starts getting more interesting. So let's go to our 5-minute chart. Okay, we're breaking out. Oh, we're starting to show some weakness. We almost have about a quad top here, but really nice double top. Bearishly engulf on the 5-minute here. We try to break down, we bounce. But this is where it gets interesting. We bounce, but what did we do? We actually rejected the 20 EMA, and that's now resistance. So what was support all morning long? I mean, look here. You see every time we lost it, we bounced right over it. We bounced right over it. But now we're turning it into resistance. This is at 120, a change of trend. So what I would start looking for, though, is right here at 125. This would be my entry. You look for the breakdown, you look for confirmation. This is like what I'm saying is that there's always, almost always, going to be a back test of resistance or support before the move continues. So what you see is we broke down, we back tested. There's the second back test and rejection off the 20 EMA. This 125 candle here, we're looking for an entry on a put. So let's watch it on the 1-minute time frame here. So this is what we start at, about 1:15 really. So we break down. This right here on the 1-minute time frame would be actually a great put entry because your 20 and 50 are coming down. We reject. We're closing under the 50. We're back testing 20, and then you're going to continue that. So if you were on this candle right here, you could take that entry. This candle right here, you could take that entry and feel pretty confident in it, really. So then you can see, though, what happens. We bounce, and then we're going to back test 20 EMA again, and here's our bearish crossover. Big deal. Like I said, there's a whole strategy on just trading the crossovers. So, you know, on a 5-minute time frame here, if you traded the crossover right here, you got rewarded big time. You know, 15-minute, you got rewarded big time. 1 minute here, you got rewarded big time too. So definitely something to keep in mind is once these EMAs start to cross over, you should start to look at that as a trend change, especially on the 1 minute and then 5 and then 15. So where's our ideal put entry? Realistically, our ideal put entry is right here. Why? Because we have our breakdown, we have our crossover, we're chopping, but the whole time we're rejecting the 20 EMA. And then this right here is our confirmation of downtrend. Why? Because we're making a lower high and a lower low. So as soon as this new candle opens, because it's going to back test, like I said, boom, this is our entry. And then you have a nice ride down here. So generally speaking, I would try to enter right about here. And I try to just take the first hit most of the time. So 428.3. So let's see, that's about a 40 to 50 cent drop there. You know, you could ride this out a little bit here. And it goes the same way too for your exits. So your exit, where are you going to exit right here? Well, this could be a potential first exit. Why? Because we made a new high. However, it's a doji and we can see continuation. Realistically, right here, if you were just going to ride it until you saw something that said not to, this would be my first exit. Mostly because we bounced. We did make a lower low and didn't make a higher high, but boom, as soon as we make this higher high right here, you need to get out because that says we could bounce, and you see we do, and then we come back down, and then boom, there it is again. Someone says, with a bearish engulfing, yeah, I like that. First time hearing that term and understanding it. Yeah, so it's just a candle pattern. You know, it's like your breakout triangles, your rising wedges, your, you know, all those things. It's just reading the price action. So generally speaking, when a candle engulfs, that means, and this is at 155, that means the entire body encloses the previous body. It does not have to include the wick. So like right here at 2 p.m., we come down and you can see we did not engulf, but what happens? We have our body completely engulfing that candle. That's very bearish. Basically what that means and shows is that the previous 5-15 minute of price action that was bullish just completely flipped and it just completely became bearish now. So this is basically how I go throughout my day. So basically I spend my whole day, I'm watching the 15-minute chart here. I'm looking for rejections, possible breakouts. And once I see what I like in the 15-minute for a longer time frame trend to play into, then you start looking at your 5-minute chart. I would say probably 90% of my trades really happen based off the 5-minute chart, not the 15-minute chart. But I don't fight the 15-minute chart, if that makes sense. So what I mean by that is, for me, because I'm scalping, I'm not getting into, you know, not purposely at least, getting into 20, 30, 40-minute, 2-hour long holds. I'm trying to basically be in and out within, I would say, 5 to 10 minutes, depending on what the candle's going to do. So for me, it makes the most sense to be watching a 5-minute pattern and then using a 1-minute candle for that entry. So, you know, it's all about, I'm reading the price action. It's all about looking for a breakout, finding confirmation of the breakout, and then looking for your back test for entry. And that's extremely important, especially trading 0 DTE like we do and trading with a tight stop loss. So for me, when I'm on a 0, I'm trading with a 15% stop loss. On a 1 DTE or next day expiration, I'm trading with a 10% stop loss. There probably will come a time where I will step up to a 10% stop loss on my zeros too, but I just haven't done it yet. But if like, so let's say here's your massive breakout right here. So let's say you have a breakout here. You're like, oh, cool, we're gonna break out, and your candle's right here. You're like, well, we're definitely breaking out. I'm gonna take my call entry. You're gonna have this whole back test. So that's 30 cents that you're gonna have back tested before it actually pushes in your way. Almost $1. So if you enter right here before the back test happens, you're gonna get stopped out before the whole dollar move that you saw and correctly saw happening happens. So that's what I mean when I'm saying is wait for the back test. Very rarely will there not be a back test, at least a little bit. Even these candles here, they're still stacking up a little bit and then coming down. It's not just a straight drop. So just be careful with that. Someone says, what are the best candle patterns to know? Best candle patterns to know. I really keep it pretty simple. I look for, my rising wedges and my falling wedges in my channel. So I'll just show you an example real quick here. So if you take your morning, run. That is not the right one. Hold on. There we go. So if you take your morning run up here, so let's just say this is really it's a technically a rising wedge, but you could say it's a morning bull channel here. What you're looking for is the break. So this is another thing that we're looking for is you have basically a 1, 2, 3 point support line that's strong, very, very strong. And then you have a 1, 2, 3 point resistance line that's also strong. So another thing to watch here is you get your bearish engulfing candle. Boom, we break support. Breaking this support right here is a very, very big deal. And that would be a great entry on that put, and even further confirmation that you should be entering that put. So that's your rising wedge. So your falling wedge, similar idea. So you take basically your high, and you're kind of drawing down and looking at your candles. So there you go. This is our resistance line. So you can see we have a resistance line, and this is real nice. We reject off this quite a few times. So this first candle right here, this is our first sign that we are breaking the downtrend and that there might be a recovery. Now, in this case, recovery was actually just sideways, but that recovery could become a V bottom. So this, you got to be watching those trends. So for me, I would say the best candle patterns to know is really just your very, very basic bull channel, bear channel, rising wedge, and falling wedge. I think with those 4 patterns, you learning those very, very well will put you very far ahead of many traders. So you use the wicks to draw your lines. Yes. So I do, and this is different on some people, and some people question me on this. But for me personally, when I'm drawing a pattern, I will use the wick. If I'm drawing a support or a resistance line or my supply and demand, I do use the candle body. And for my patterns, a wick is what I call a hint that the pattern, so if you had, let's get our line back up here. So we have our resistance line here. If this candle wick through, so just this wick through it, but our body, kind of like you see right here, you have this wick through it, but there's no body. That is what I would call a hint that it's going to happen. This, the candle body, and really the whole candle going through it, is that confirmation that you are seeing a breakout or a breakthrough of the resistance. Someone says, how do you decide on 0 or 1 DTE? So for me, primarily, I start with 0 DTE. And again, 15% stop loss. my goal realistically is like 20% profits, but I'm happy to take anything from 10 to 20% really. I'll take green if I feel like the trend's going away from me. I'll just exit and I'll, green or a small loss. I try to gauge it off the actual cost of premiums and more or less the movement of SPY. So like what I mean by that is generally speaking, come 12:30, I'm looking to switch over to 1 DTE. Generally speaking, because one, theta starts eating aggressively after that time period. And unless you are perfect in your timing, you are likely to be stopped out before the move happens. However, I will say it really depends because like right here, we have a lot of a movement. So if you have a 0 and your timing's good, you're going to get rewarded a lot. But, there's other days, like this day right here, this was Tuesday. You see, we don't have as much movement, very tight range. So a 1 DTE would be better here because it's much more choppy and it's going to prevent you from getting stopped out before the move happens. But you trade off lower profits for more protection. So it's just kind of something you have to feel out yourself. But for me, I try to switch over sometime around 12:30, 1 o'clock to the 1 DTE, just basically because usually price action slows during that time period and theta starts eating harder to prevent getting stopped out before it happens. It says, with HA candles, I believe their open is always locked in at halfway through the previous candle. Do you think this affects your ability to read the PA? I do not. Mostly because if it is that way, I mean, I can see what you're saying here about the halfway and stuff like that, but the thing about it is you see which way the candle goes. So the general idea behind like the HA candles is that it's like the average and whatnot, and there's more of like a scientific reasoning behind it. But what it shows me more is like the trend. So I don't think it's a disadvantage. I think it's a far advantage. And there was a time period in the fall where I switched from standard candles to the HA. And it definitely was a very big improvement in my trading doing that because I feel like you are tricked less because this shows like, yes, there's your half and there's your entry here, but you're not seeing that upside, which like on a regular candle, you might get that wick to the upside where you're chasing that. This is more clear about when there is a direction and when that's continuing, and it's very much so clear when that direction stops. Let's see. Any books I recommend? Honestly, I have never read a TA book. I've never really read a day trading book or any sort of trading books. For me, and I've talked about this before, I'm very much so self-taught. So basically when I used to work as a nurse full time, and I did that for about 6.5 years before I started doing this full time. And basically during that time as I was working as a nurse, I would just do TA all night long. So basically what I would do is I traded Bitcoin and I charted a Bitcoin and I would just watch it and I would be like, oh, what's this? And I would find a pattern that I didn't understand, like what it was. And I would literally type into Google pattern with lines that look like a triangle candlesticks. And then I would see what comes up and I would go to Google Images and I would find an image that matched what I was seeing and what that description was. And I'm like, oh, that's called a breakout triangle. And then basically I would just read as much as I possibly could about a breakout triangle from numerous different sites to not be like, jaded by one site. And then I would know what that is now. And that's how I learned. I just learned by pretty much trial and error. Just doing it hands-on, watching the candles, and obviously Bitcoin's 24/7, so there was plenty of time to do it. And if I really had a question that I didn't understand why something moved a certain way, I would just go to YouTube. There's just so much free stuff out there. You really never need to pay something for TA, or at least learning about how to read candles and things like that and patterns, because there's just so much free stuff out there nowadays. How is support and resistance lines different from supply and demand? So good question. I get that a lot. Basically, a supply is a resistance line, but a resistance line is not always a supply line. So what I mean by that is basically I use an indicator that kind of shows me when there is a supply put in and when a demand's put in, and then basically how I read that indicator tells me that there is a supply there. So what that means, so like let's go to Friday's so I can show you in kind of real time here. So this is Friday's chart updated with supply and demand. So what do we have here? We come up, we put in a new supply at 431.79. So my indicator would say, okay, there's a supply here. So that is a resistance. And obviously what that you would take that is as a much more aggressive, much stronger resistance. So then what happens here is we break out, we put a supply in, so then you're looking for a short. We come down, we bounced off the 8 EMA and put a demand in. That's very bullish, bouncing off the EMA and putting a demand in. So we're looking for a breakout. But what happens is we fail to reach the supply and we actually put a new supply in. So now we have two new supplies for the day. I mean, within about a 19-cent range of each other. That is an extremely strong resistance area. And you can see what happens is we have a meltdown. So basically what you're looking for is that the supply is going to be a strong resistance and demand is going to be a stronger, support area. And you can play these areas. So, as the trend's going up, you want to see it like this. Like if this was going to continue, you would want to see this back test. And I believe this happened on Thursday. But yeah, so we had our breakout here and we come down, we make a new demand before we continue to break out. We come down, make a demand or reconfirm demand, and then we break out. Basically, you want to see as price is going higher, these back tests that I've been talking about, back tests of support to reconfirm them. Otherwise, you end up running up basically on just momentum. And when that happens, you end up having a bigger crash down like this. Because you can see here, we hadn't confirmed a new demand since the 429, and we got all the way to 432 basically, and then we got rejected. Let's see here. Actually, candles are almost higher than each other. There was no retrace for the 4 months. Yeah, so Daniel, about the HA candles, unfortunately, I feel like it's harder to explain. And I thought about doing it this week, and I should have done it, and maybe from another video I'll do it, but I should have recorded just basically the 1 minute chart or this screen that I have up here. I should have recorded it happening live and then like played it back at like 2x speed or something. But it's hard to show it happening after the moment, but like live happening in the HA candles, they definitely, if you start to learn them and how they move and like what a rejection looks like and what it doesn't look like, they look much different happening. Like this little breakout area here, you would start to see the recovery and you would start to see the failed breakdown right here for that put entry. Assuming you thought it was going to be bigger, this would be your better put entry. But you're going to see that wick kind of go up, the wick, and you're seeing the body, and then you're seeing the lower low, and then the confirmation. When this candle doesn't continue to break up, your downside's coming. So that's kind of what I mean by, the lower lows and the higher highs. So it says, how do you choose HA candles versus regular candles? So you go up to your style settings and you can go over to time axis, or no, sorry, where is it? Appearance, yeah. And then you just choose, I guess this is one, for some reason this one didn't set over to HA, but then you just choose Akini Ashley candles right here, so. And then you just hit apply. This 5 minute, I don't know why I didn't have it on there, but yeah, so that's basically kind of how I go through my day, how I read my price action, how I find entries. And then, like I said, start at the 15 minute, go to the 5 minute, find your entry on the 1 minute, and then use some sort of indicator, whatever you like. Some people like the RSI, some people like the MACD. I do not like those two personally for trading SPY. I mostly rely on Vold and VIX for my confirmation. So basically what I'm looking for is that the 1 minute SPY, 1 minute Vold, and 1 minute VIX are all in congruence with each other. And then obviously my 5 minute trend is in agreement with what those three are saying. And then for me, that's pretty much an A+ setup for me. If there's not any other questions, I'm going to go ahead and end it here. We're about an hour in now. So hope you guys enjoyed this video. I hope it answers some questions. I hope it helps teach you guys a little something. It says, do you auto take the 20% or just set a stop loss there and ride it more? So when I enter my options, I have an OCO order on. So basically one cancels the other. So what I do is, and I've learned this as a trick with TOS, basically you enter with your set 15% stop. So that basically guarantees no matter what happens, you're going to exit if price goes against you. And then I just throw on 100% take profit. And then what I do is I immediately open that 100% take profit as a cancel and replace with a limit sell. So basically what I do then is I have that as an open limit sell for profit. And then, you know, if I'm seeing, oh, okay, we're about to make a 1 minute DMI wave down, it looks good. So like right here, we're about to make a 1 minute DMI wave down. You know, if I'm break even or up maybe 5%, I'm going to put that limit profit in as like maybe a 25%. And I'm hoping that that wicks down low enough to hit it. And if it doesn't, then I'm basically immediately, once again, cancel replacing and then getting out immediately. I don't use market to exit. Mostly because I have a stop loss, so I'm never like that scared to just need to get out where I'm like, oh, this is going to immediately go against me. But that's kind of how I get in my rhythm of getting out. Another thing I do, it's been harder lately this like last week just because I feel like price has been moving so fast in premiums. But I will at times edit my stop from either like the negative 15% to break even. Or if there's like, you know, if we would have entered up here, we come down and we're still up like 15%, you know, 10% right here. And I think there's more to come. I might edit my stop loss to break even. Usually I do 5% though, just to guarantee some sort of profit. And then I'll either let it ride till it hits my 5% take profit, or until it hits my, you know, my bigger 20, 25, 30% actual profits that I want to have. What constitutes the supply and the demand levels you map out? Yuckberry, what do you mean by constitutes? How do I get the levels? If you're meaning how do I get them, there's an indicator I watch that how I read the movement of that indicator tells me that a new supply is being put in or new demand is being put in. Otherwise, I'm not quite sure what you mean by what constitutes it. Unless you mean my colors. Light blue is supply and demand is purple. All right, guys, I hope you guys enjoyed this video. I'm going to have to go cut it out here. You guys have a good night. If you have any questions on price action or really anything else, just message me over in the daily chat or in the Talk to DD or on YouTube. Drop me a comment. So, all right, guys, have a good night.